Hello team, and welcome to our Financial Tax Service Compliance Training. As a professional tax preparer, our responsibility goes far beyond entering numbers into tax software and calculating a refund. Our responsibility is to prepare accurate, complete, and compliant tax returns based on the information provided by the taxpayer and the applicable tax rules. There may be times when a client asks you to do something that could increase their refund but isn't supported by the facts. There may also be situations where information simply doesn't make sense. In those situations, our job is not to find a way around the rules. Our job is to ask questions, document the answers, obtain additional information when necessary, and prepare the return correctly. Let's begin with your PTIN. Anyone who prepares or substantially assists in preparing federal tax returns for compensation generally must have a valid PTIN. For the 2026 calendar year, a paid preparer must have a valid 2026 PTIN before preparing returns for compensation. That means you should never prepare paid federal tax returns using another preparer's PTIN. Your PTIN identifies you as the preparer. Treat it as an important professional credential and make sure it remains current. One of the most important concepts I want every preparer on our team to understand is due diligence. The IRS identifies 4 specific due diligence requirements for paid preparers involving certain credits and filing status determinations. This includes returns involving Earned Income Tax Credit, or EITC, Child Tax Credit and Additional Child Tax Credit, Credit for Other Dependents, American Opportunity Tax Credit, and certain head of household determinations. When preparing these returns, don't assume that because information fits into the software, it must be correct. Tax software does not replace professional judgment. The IRS specifically instructs preparers to make reasonable inquiries when information appears incorrect, inconsistent, or incomplete. Here's an example. A taxpayer tells you that 2 children lived with them for the entire year. But during your interview, they also tell you that the children actually lived with their other parent for most of the year. That's a red flag. Don't ignore it simply because claiming the children produces a larger refund. Stop. Ask additional questions, document the answers, and determine whether the taxpayer actually qualifies. This brings us to Form 8867, Paid Preparer's Due Diligence Checklist. When required, this isn't an optional form. The preparer must complete and submit Form 8867 for applicable returns involving EITC, CTC, ACTC, ODC, AOTC, or head of household filing status. But remember something very important. Completing Form 8867 by itself does not satisfy your entire due diligence responsibility. You still have to ask appropriate questions and evaluate the taxpayer's answers. The IRS currently requires relevant due diligence records to be retained for at least 3 years. These can include Form 8867, worksheets, documents relied upon, records showing who provided information and when, and notes regarding follow-up questions and answers. That's why documentation is so important. Now let's discuss something that can create serious problems for both the taxpayer and the preparer: manipulating information to increase a refund. Never create income, never invent expenses, never create dependents, never change filing status simply because another status produces a larger refund, and never knowingly omit information because including it reduces the taxpayer's refund. Here's a common example. A self-employed taxpayer wants the Earned Income Tax Credit. Don't enter all of my business expenses because my refund will go down. That's not acceptable. The IRS specifically warns that taxpayers must claim allowable business expenses when correctly computing self-employment income. If information appears questionable, the preparer should ask additional questions, request supporting information when appropriate, and decline to prepare the return if the concerns cannot be satisfactorily resolved. Our responsibility is to prepare the correct return, not the return that generates the biggest refund. Here are situations that should cause you to slow down and ask additional questions. A taxpayer reports very little income, but significant household expenses. A taxpayer suddenly has several dependents they didn't claim previously. Someone wants to claim a child who didn't live with them for the required period. A self-employed taxpayer reports income, but says they had virtually no business expenses. Expenses appear to be estimated or rounded rather than based on actual records. A taxpayer tells you another preparer gave them a bigger refund, or a client asks you, "What numbers do I need to get the maximum refund?" Your answer should never be to manufacture numbers. Ask questions, document the answers, and when necessary, request additional information before completing the return. The IRS specifically identifies errors involving qualifying children, income and business expenses, filing status, and education credit eligibility as common areas of preparer compliance problems. Compliance also includes protecting taxpayer information. As tax professionals, we handle Social Security numbers, dates of birth, income information, banking information, and other highly sensitive data. Tax professionals are frequent targets of cybercriminals because stolen taxpayer information can be used to file fraudulent returns. The IRS also notes that federal requirements apply to safeguarding client information and directs tax professionals to maintain appropriate security plans. So don't casually email sensitive documents to unauthorized people. Don't leave taxpayer documents sitting where others can see them. Don't share passwords. Don't allow another preparer to use your credentials. Be extremely careful with suspicious emails, attachments, and links. And always follow our office procedures for storing and transmitting taxpayer information. Protecting the taxpayer's information is part of being a professional tax preparer. One of the most important rules I want you to remember is simple. When something doesn't make sense, don't ignore it. Ask questions. Document the answers. Review the applicable tax rules. Ask a supervisor or experienced member of our team when you're uncertain. And don't transmit a return until the issue has been resolved. The IRS guidance is clear that when information appears incorrect, inconsistent, or incomplete, a preparer must make reasonable inquiries rather than simply accepting information without further consideration. Sometimes the correct professional decision is, "I cannot file this return until you provide additional information." And sometimes the correct decision is, "I cannot prepare this return." Team, remember, our goal at V Financial Tax Service isn't simply to prepare as many returns as possible. Our goal is to build a professional, ethical, and compliant tax preparation business that clients can trust year after year. Accuracy comes before refund size. Compliance comes before convenience. And when you're unsure about something, ask before you file. Don't guess. Don't assume. And never change information simply to generate a larger refund. Thank you for completing this VIA Financial Tax Service compliance training. Let's have a successful, professional, and compliant tax season.